Best described by Warren Buffett: be fearful when others are greedy and greedy when others are fearful. Currently, Bitcoin is attempting to break down from the rising wedge formation it has been developing over the course of about 10 days. With FOMC just around the corner, the markets are expected to get a little volatile. We're here today to discuss the short-term price action and talk about the next move for Bitcoin. Let's get into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day today. We're here to discuss Bitcoin on the larger time frame and of course the small time frame, running a complete technical analysis today, discussing the charts and the next move. We'll also briefly go over FOMC, with that coming up in a couple days. We'll discuss the interest rate hikes and the potential impact those hikes could have on the market. Of course, covering market data and the broader markets today, so stick around to the end of the video. Before you do get into it, smash the like button, hit the comment button, subscribe to our channel, and welcome to all the new subscribers. We've had a pretty big surge in subscribers over the last few weeks, so thanks for tuning in. You can also find us on Telegram, guys. If you haven't joined us already, I highly recommend doing it. It takes 10 seconds. Head down to the pinned comments, click the second link. You'll get access to charts, updates, analysis, videos, information, more. If you want regular and more daily updates on this kind of stuff, besides just the videos, this is where to be, guys. You have, like I said, charts, all of our videos, educational posts, news events, everything in between. If you are interested in our VIP channel, you can get access to the VIP channel, guys, via the links in the free channel. You can see our membership information and trading track record right over here. You'll get access to two groups: our main VIP channel, which I don't really want to show because we do have an active trade at the moment, and our group chat. And this is our group chat over here. It just had a recent update. You can see we've added subtopics. So we have a help chat. We actually are doing altcoin videos as well now in our VIP channel. We're doing trading and charts information over here. We've got more educational posts, we've got more news events, and our general chat. This is all included with, of course, the main VIP channel, which you can see up over here. Go ahead and contact us for more information. Let's get into a video, guys, starting off with the market data as per usual. So currently, how are we looking? I don't expect too much of a change. We haven't really moved too much in the last 24 hours. I think yesterday we're up around 18-ish%. So I'll go ahead and refresh the page. Doesn't look like it's working currently. That's okay. We'll look at this first and foremost. Volatility 3.45 for the 30, and for the 60, 3.05. As for volume, we're seeing a 2.9% increase in volume. So not really too much. 118 billion, sitting very much around where we were yesterday. 24-hour liquidations is strong at 136 million. If we look at the breakdown of these liquidations, we can see over the last 24-hour period, we've had a very even spread between longs and shorts in this chop zone. As it's broken from the wedge, it's pushed back up, it's rejected, it's broken back under the wedge, it's pushed back up. It's very choppy right now, and this kind of chop is, although not expected, as we do generally expect rising wedges to be a little bit more decisive in their directions, particularly as we approach the apex after we've had at least these 5 retests. So generally we do expect a little bit more decision, but considering the fact we have FOMC coming up, that could be a contributing factor to why the markets right now are a little bit more indecisive in their directional moves. Anyway, moving on from there, guys, the broader markets, we can see the DXY has bounced and retested the 103 zone. The 103 zone is an incredibly important level that we do need to hold on. Again, what happens with FOMC is going to determine where the DXY goes to. As a general measure, the DXY goes up, we generally see stock market drop toward the downside. If the stock market drops down, we generally see Bitcoin move toward the downside. However, the correlation between stocks and crypto have been pushing apart ever so slightly. If you take a look at this, we have the DXY, the strength of the dollar, has a negative correlation with stocks to about a degree of negative 81%, or negative 0.81. Okay, so they're almost perfectly inversely correlated. They're incredibly strongly inversely correlated. If you look at stocks to crypto, it's got an average of around 0.7. So they're around 0.7 degree correlated when you look at the correlation coefficient. So they're strongly correlated as well. So if we do see the DXY move up, we generally see most of the time the stock market drop down. If the stock market drops down, we generally most of the time see crypto drop down. And that is why FOMC is so important to look at as a crypto trader as well, because it can influence or have a domino effect onto the cryptocurrency market. Again, guys, moving up on the DXY results in asset prices falling. Moving down on a DXY results in asset prices rallying. Looking at the stock market over here, we can see the Dow Jones has found a temporary support at the 32,000 level. This area has been support now for 6 whole freaking days. Crazy, guys, how many attempts to the downside we have seen here. We've seen every single daily candle almost break below. That's 4 daily candles I can count breaking below that support level, but unable to really push down below it. So very, very strong support. Again, if we lose this level, we will continue downwards towards this downtrending support line. Otherwise, expect a bounce back upwards as we are forming a possible descending channel formation, which could take us to retest, this range between 33,500 and 33,000. Moving on, S&P 500. Very similar stuff here. Bouncing from our downtrending bear market support level. You can see this downtrending bear market support level right over here. We've seen quite a strong bounce. Again, a couple days of consolidation around that point, retesting the 50 EMA and the key horizontal resistance at 4,000. A break through 4,000 will be incredibly bullish, and I do not expect a break to occur until FOMC have surpassed. I don't really expect too much to occur, guys, in the next couple days until FOMC is either very, very close. So leading up to FOMC, we generally see a bit of volatility come through as people try front run the moves. Insider traders have the information, bots are trading, gamblers are kind of throwing money in any direction, but generally we do see volatility speed up as we approach FOMC, but being about 2 days out, we're not going to really expect too much volatility in the next 24 hours. Moving on, guys, let's go ahead and get into Bitcoin. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. Bitcoin, like we said already in yesterday's video, has retested the most important level on the chart. And this is, quite frankly, the most important horizontal resistance. If we delete this, we can say this is the most important horizontal resistance, which is the 28 to 30,000 level, and this is the most important horizontal support, which is 18,300 to 19,200. Both of these levels represent significant importance because they represent points of triggers in the macro directional trend, meaning a break above 30,000 will trigger a bull market. A break below 18,300 will trigger a continuation towards new lows, potentially 14,000 to 12,000. So very important levels, guys, on the charts. So we'll discuss these really, really briefly. Let's start off with the key one we're retesting, which is this 28 to 30,000 level. As you can see, the 28 to 30,000 level is in fact the yearly bull market low of the prior cycle. You can see we retested this level after that first initial crash in that first bull market rally right over here. Okay, this was January 2021. We retested that base of support. We developed a base of support. We then retested that base of support once more in July 2021. That was after a massive correction, guys, from this rising wedge formation we had over here. Massive correction down. A lot of people thought the bull market was over, but it was not. That was just the first major correction within the bull market. Then finally, we retested it once more, guys, all the way down in June 2022, where we finally crashed below it. You can see the moment we crashed below that, we had a absolutely massive crash in Bitcoin's price. One of the largest crashes we had seen for quite some time there, guys, pushing all the way down to sub $18,000, representing just how strong that neckline was, guys. Such an important neckline. As you can see in the chart right now, we've actually come up and we are currently retesting that exact same resistance zone, which is at $28,000 to $30,000 range. So from a horizontal standpoint, okay, from a price action standpoint, you can already see the significance of this price range in the history of our price action. It really has acted as a super important level. Now, if we go ahead and talk about it from a bull market standpoint of view and the macro, if we look at the prior lows of cycles, and we'll go ahead and pop this on in again, and we're going to go over this again today. If we look at the prior lows of cycles, which in this instance was at $30,000 level, we just discussed, okay? We just discussed 30,000, okay? In the prior cycle, we're looking at 6,200. You can see it right over here. And in the prior cycle, we're looking at 434 right over here. On the monthly chart, every single time we close a monthly candle, guys, a monthly candle above that prior yearly low, when in this case would be this horizontal resistance, we never, ever, ever, not once have we ever seen a monthly candle close back down below it. Even the COVID crash monthly candle closed above it and perfectly bounced on it as support before we continued upwards, guys. We've never seen that occur. So to answer the question from one of the commenters yesterday, would 30K be a good time to buy? If you have not already bought Bitcoin, if you've not been following the channel, as you would know, we bought Bitcoin in a few places. We bought Bitcoin on this look at 18,000, we bought at 16,500, and we bought on the 19,200 break right over here, okay? But if you have not bought Bitcoin already, I would be waiting, okay, for a monthly candle close above 30,000 before I consider buying a Bitcoin again, or on any pullback that occurs, which occurs and keeps the price above this support, okay? Every single pullback that will occur above the support is going to be healthy. If we lose this support, we can expect a continuation back deep within this range. But even then, guys, if we remain above this 19,200 to 18,300 support, we are technically still going to be healthy in the higher time frames. So at the moment, would I be buying Bitcoin? The simple answer is absolutely freaking not, guys. We're at major resistance. Buying at resistance is the best way to get yourself wrecked, guys. Now, this is the thing. At some point, all resistance is going to break, just as at some point, all support is going to break. So we're not going to sit here and say it is impossible for Bitcoin to break 30,000 now. But what we're saying, according to our structural analysis, according to the technical analysis, which we'll get into, the probability that we break upward now in comparison to seeing a retracement, healthy correction, and then a breakup is significantly less statistically probable. Okay, there's a higher degree of probability that we see a breakdown first rather than a straight push through. So when you're trading, align yourself with the probabilities. TA is not about being correct all the time. It is about aligning yourself with the statistical probabilities every single time to the best of your ability based on the data and the analysis you can derive from the structures and the technical indicators, okay, to give you a statistical edge against other market participants over a long period of time. That is what it's for. Do not look at any individual trade with significance. Look at a collective group of trades of significance after an extended period of time, whether it be a week, whether it be a month, whether it be 2 months, etc., etc. Okay, that is what we're looking for. So we'll get into the short term in a second, but let's discuss the significance of this support right over here. I don't want to get into too much because we're so far away from it now. There's not too much to talk about. But say hypothetically, guys, because there are some people who still think Bitcoin is going to break towards new lows. So to entertain that idea, let's discuss what we could expect to see, right, if we do see that occur. So although the probability of us going to new lows is very, very low, again, everything has a degree of probability. It is very low chance, but it can still happen. There are definitely triggers that could cause it to happen, but the chances of that happening are very, very low. But if we do occur and we do break that, let's talk about it. So as you can see, guys, the 2017 yearly high, the 2017 bull market high right over here is actually also a neckline of support, right? We have this overall neckline of support. And this was that neckline we broke above before we really went parabolic on the bull run. Okay, so if we extrapolate that one on a horizontal level across, where can we see that point line up with? Well, see this red line over here, this horizontal red line, that is what we call the point of control. That is the POC according to our visible range volume profile, which is a technical indicator showing all these yellow and blue bars on the right-hand side of your monitor. Okay, the POC represents the individual horizontal range, or the horizontal point, the price range, which attributes the highest degree of historical trading orders, meaning it is generally assumed to be the highest point of support or resistance on the chart. If you're above it, it is resistance. If you're below it, if you're above it, it's support. If you're below it, you're resistance. So currently, this is the strongest point of horizontal resistance we have, support we have on the chart. Therefore, that is what we're saying. For us to be healthy, we need to remain above 19,200. If we lose 19,200, where will we possibly go? Again, guys, we're looking for these gaps in the VIPV. We're looking for these volume gaps. And what you can see over here, this low volume range occurs ever since we drop off this range. We have temporary base support, which we probably will not hold. But as you can see, a moment we drop below that, we have a steady drop in this VRPB until we start reaching this chunk of volume where we can expect volatility to dry up, and then we have a massive chunk of support. So the ideal area for support, if we do come to a new low, would be this range between 12,000 to 14,000. Again, I do not think this is going to happen. I am simply talking about the data. I'm simply translating the charts. I'm simply telling you what the charts say. If that occurs, that is where we expect the price to bottom out. But already, guys, looking at the higher time frames, looking at like what we've already seen, looking at this chart particular, okay, the probabilities we go to new lows is significantly smaller. So let's go ahead and get into one more thing, which is going to be our structural analysis of the rising wedge, and then we'll get into our technicals, starting on the higher time frames, the macro charts, and then dive really into this short-term chart over here, talk about the technicals and discuss the probabilities of a breakdown and why this chart is still actually technically looking bad and why it is still a rising wedge formation. So currently, guys, like we said, we saw a rising wedge develop. We have seen a couple breakdown attempts of this rising wedge. None of these attempts have really come to fruition, and I gave a little bit of a reasoning to why I believe that was the case in Telegram. If you're looking at this Telegram channel here, you can see already, we talked about this already, but as I discussed, guys, one of the main reasons why we're seeing indecision here was we're leading up to FOMC. We're very much in a speculative market right now. A lot of the price action we're seeing over the last couple of weeks have been more speculation driven, particularly after the banks have fallen. It's really given a lot of fear in the traditional market, traditional financial system. Bitcoin has kind of been acting as this more or less hypothetical safe haven for people's money right now. So although we haven't had a whole lot of new money coming to the market, a lot of people are starting to buy up Bitcoin who are currently in the market, and that is kind of driving the speculative price action to push it upwards rather than seeing healthy corrections. When these corrections need to occur, we see small dumps and then they're instantly bought back up. So in the grand scheme of things right over here, guys, this structure is still very much intact. It has not been invalidated. For it to be invalidated, the price will need to push above and close above this uptrending resistance, okay? This uptrending resistance will need to be invalidated for the rising wedge to be invalidated. Currently, what we have seen is a few breakdown attempts, none of which would actually gone anywhere, and we are currently seeing consolidation underneath this resistance currently, which could still result in a pullback in the time. So, assuming this is still going to pull back, let's talk about where we could go from here. And we're going to go ahead and bring up our VRPV, guys. So we talked about this a little bit yesterday. The main chunk of support we have on the chart, guys, is still sitting between 25,200 and 24,400. This is going to be the main area of support on the chart. So our measured move target from the rising wedge actually suggests that we could potentially see a larger drop towards 23,000. You can see this huge gap over here in the volume range, but although that is possible, we do have massive support over here. So in this instance, guys, the measured move generally describes a range of which the max target could reach based on the current structure we're in. But generally, measured moves do not reach their final target. The price will usually move in a directional break from the structure towards the most significant support within that measured move range. That being this 25.2 to 24.4K range. If that level is lost, then this area would be a prime zone to attempt to develop support in, most likely finding support around that 22,400 range. However, guys, according to the market structure, the next max target will be 25.2 to 24.4 according to the breakdown of this structure. On the smaller time frames, we are looking for local highs and lows of prior support. So in this instance, we're looking at something like 26,900-ish to find this base of support as a support level. We're looking at these VRPV jump ups over here Again, 27,200, 27,400. We're looking at these little gaps over here in the RPB and local highs. Again, looking at points like this, 25,600, and of course, these lows, 25,200, 24,400. And these would be the realistic targets to actually play out if Bitcoin continues towards the downside. Like I said already, for this structure to be invalidated, we will need to see the price push and break above this uptrending resistance to invalidate the structure and then develop into a new structure. As we already know, guys, structures develop into structures, which develop into structures, which develop into structures. I'll show you a perfect example. If we look at a hypothetical example over here, this is a price action chart. I'm going to go ahead and draw something in. Okay, we have, okay, what would you call that pattern? Well, that is called a falling wedge, right? We have a falling wedge structure. Now, if the falling wedge breaks up and heads over here and then continues back down, you can draw in a descending channel structure. Okay, now within these moves, you have smaller structures play out. You can have another falling wedge in this structure. So it's important to note that structures will develop into structures that then develop into structures and then also develop into more structures. So at the end of the day, guys, nothing is completely confirmed when it comes to structural analysis. It is meant to give you a general guide of the next move of Bitcoin on a smaller time frame or a higher time frame. And like I said already, they're just general guides. Price will always move between support and resistance. So you look for those major support zones, look for points of which we could potentially see bounces from, where we'll develop new structures or continue toward the downside. Okay, guys, let's go ahead and get into our technical analysis starting on the higher time frame. There is one indicator I really want to talk about, and this was the pi cycle bottom. So looking at the pi cycle, this has been a really interesting indicator over the higher time frames. We're seeing it actually predict our bottoms in the prior two cycles and general tops in the prior two cycles as well. In this instance, we predicted the top on the pi cycle was in April 2021. In fact, we actually pushed a little bit higher over here and created a bearish divergence. Now, in this instance, bearish divergences do generally obviously print highs on the price action and lows on the RSI. But the high point you actually take from that first retest. So according to the pi cycle top, it did actually predict the top in this instance if we're talking about the technical and structural top rather than the price top. In this instance as well, guys, it did actually predict the bottom around over here, 18,000. We did drip a little bit lower, but that was mainly caused by that FTX crash. So whether or not we would have seen that if we didn't crash on FTX is a whole nother story. Overall, it has predicted these bottoms and tops quite well over the course of Bitcoin's history. Currently, we are pushing above the short, okay, the short EMA, so the Bitcoin high short, the low long, and the low short EMA on the chart, of course, looking incredibly good over here. As we can see in prior cycles, when we have pushed through these levels, we do generally see a continuation upwards, but the ideal scenario we want to push Bitcoin into is when we have the gap between our red line, okay, and our white line, which is our high long, okay, and our low short, okay, our low long, sorry, on the Bitcoin's moving averages over here on the pi cycle bottom. That creates a nice channel that Bitcoin will move in between and generally push in this upper part of the channel and break outwards into a bull market. So what does this tell us? We're still very much in the early phases of developing a uptrend. This is really very much the early phases of developing uptrend. Looking at our moving averages of 50, 200, and 300, we can see a very similar thing, guys. We're very much in the early phases of developing an uptrend. The 300 is below us, which is great to see. The 50 is underneath the 200, and the 200 is over the 50. Again, we do want to see that 50 break back above the 200 on that weekly chart to signify the strength in this trend is starting to really ramp up. Okay, guys, we need those small time moving averages above our higher time frame moving averages to signify overall strength, and we need the price action to remain above all of the 50, 200, and 300 to signify an aggressive uptrend. Look at this. Every single time we have the price over the 50, 200, and 300, we have aggressive uptrend. Every time we are underneath that 50, we have aggressive downtrend, guys. Okay, so very interesting stuff to look at. Let's go ahead and quickly jump into the short-term time frame one more time and finish off the video after we do a quick technical analysis on this structure. We're going to go ahead and bring up the RSI. We're going to go ahead and bring up the Gaussian channel today, and that will be it. So zooming out to a 4-hour chart to start off with, what we can see, guys, we can see obviously bearish divergence printing off over here, decreasing momentum, increasing price. Not a very good sign. Moving down to a 2-hour chart, what we can see, again, the bearish divergence is showing. We can see the price is coming and still kind of sitting above that Gaussian channel. Again, that is a pretty good indication that we are still in an uptrend, and I would like to say we definitely are still in an uptrend, right? The macro, the higher time frames, everything from the daily to the 2-hour is still signifying an overall uptrend. However, the price structure is signifying weakness in that uptrend. And I did hear a comment from someone in the channel yesterday saying, is weakness not expected as we enter the weekend? Well, of course it's expected as we enter the weekend, but we haven't just been seeing weakness in the last few days. This entire structure, guys, for the last 10 days has been showing us that the trend is starting to weaken as it is pushing up, as we have a decreasing momentum since the point of the 17th of March onwards. So it's been about 5 or 6 days now since we've been seeing weakness actually visually show up in the charts. So it wasn't just the weekend. Moving over here to the hourly chart, we can see the price is really starting to hug this Gaussian channel. The bounces are getting smaller over here. We're really starting to hug. If we break down on that hourly on the Gaussian channel, we will be really flipping toward the downside. On the 30-minute chart, we can see that has already happened. We've already broken off that 30-minute midline on the Gaussian channel, actually rejecting from that midline, and the price looks like it is continuing towards the downside now. So on the higher time frames, on the smaller time frames, I do expect this price to continue downwards. I would like a little bit more confirmation on the hourly chart over here, guys, hopefully dropping below that midline to really push the price down. We want to see the volume and volatility pick up towards the downside. We're going to start having to lose this 27,500 range. However, guys, while we're underneath this resistance, we do expect the price to continue downwards. Therefore, low risk shorts are probably a great idea to take. I'm going to go ahead and end up the video there, guys. If you've got any questions, let me know below. I'll see you guys tomorrow. But before we go, Crypto Academy courses at gmail.com. Contact us, 10-unit course, teach you everything from market structures, candlesticks, technical indicators, how to trade, how to manage risk, how to deal with your emotions, and so much more. Go ahead and contact us. Sign up to Bitget as well, guys. The Bitget exchange, you get 15% off all your trading fees, and of course, join up VIP for a whole heap of market information. See you guys tomorrow.